It's a brand new day, another opportunity to do business. We have 55 minutes to do current and relevant business talks here on Business Morning. I'm Ini John McCon. We start as usual from the global space. Oil features were a little changed on Wednesday as markets are weighing expectations from more supply from major producers next month, a softer US dollar, and a mixed bag of economic and market indicators from the United States, which is the world's biggest oil consumer. That is also weighing on that. So looking at the numbers this morning, it's just a little bit change, 0.01 for Brent, bringing it to $67.12 a barrel. WTI is on the flip side. It's down 0.05%, bringing the price to $65.42 a barrel. Brent has traded between a high of $69.05 a barrel and a low of $66.34 since June 25, as concerns of supply disruptions in the Middle East producing region have ebbed following, the ceasefire between Iran and Israel. Weighing on prices, according to American Petroleum Institute data that was released late on Tuesday, it showed that U.S. crude oil inventories rose 680,000 barrels in the past week at a time when stockpiles typically draw amid the summer demand season. And today's oil price moves are being pushed by the interplay of potentially rising OPEC Plus supplies. They're meeting on July 6th, and that's confusing inventory signals. Uncertain geopolitical outlook is still there, and macro policy ambiguity is also there. However, planned supply increases by the Organization of Petroleum Exporting Countries and its allies, that's OPEC Plus, they include Russia, appear already priced in by investors and are likely to catch market off guard again imminently. And in Nigeria, business activity in the country dropped to its lowest level in 7 months. That's the number for June. And according to Stanbic IBTC's Purchasing Managers Index, the PMI declined to 51.6 from 52.7 in May, reflecting weaker output, new orders, and purchasing activity. The slowdown comes even as inflation shows signs of easing. Nigeria's inflation rate fell to 22.97 in May. It's a second consecutive decline as reforms begin to take effect. Analysts say price pressures in key sectors like food, utilities, and healthcare are softening. However, firms continue to face high operating costs, with purchase prices still rising, albeit at the slowest pace in over 2 years. And we're still in Nigeria, where AFDB has said that the country needs an extra $31.5 billion every year to meet its development goals by 2030. This was released by the African Development Bank's latest country focus report. The total annual requirement stands at $47.6 billion for infrastructure, innovation, and public services. The FDB blames low tax revenues, weak public finance systems, and over-dependence on oil for the shortfall. Despite reforms like fuel subsidy removal and market-driven exchange rate, Nigeria's tax-to-GDP ratio remains at just 5.2%, and that's the lowest in West Africa. AFDB warns that unless Nigeria broadens its tax base and boosts compliance, its over-reliance on oil and borrowing will continue to strain public finances. And talking of finances, financial institutions and regulators are stepping up efforts to deepen understanding of cryptocurrencies in the country's evolving digital economy. Kudat's Technologies Limited, in collaboration with the Securities and Exchange Commission's Financial Literacy Technical Team, hosted a pivotal event titled Understanding Cryptocurrencies for Financial Institutions.
Blockchain. The growing adoption of cryptocurrencies has made financial literacy more critical than ever. This event brought together bankers, regulators, and fintech experts to explore how digital assets can integrate safely into Nigeria's financial ecosystem, balancing innovation with compliance.
Using cryptocurrency is actually a sensitive issue for us because we don't regulate currencies. It's the CBN that regulates currencies. So on the back of this growing youthful technology savvy population, which is the youth, also there's a talk about why the young people have different portfolios from older people.
Also top on the agenda is the role of regulation and trust in driving crypto adoption in asset management and securities.
Where we went to the regulator, we said, this is what we're doing. What is the framework which we can fall under, right? So that it gives confidence to our customers, it gives confidence to the market, and then it gives confidence to you that we're doing the right things.
Africa, I would say, from Nigeria is not really where we're experiencing that the most for asset managers and banks, but it's more in South Africa right now that the banks are starting to warm up to the idea. You've got 250 odd regulated entities, so we're seeing that. And I guess it's, well, first it's proof that it works and something good to come to see for Nigeria. But not necessarily a warning message, but say that now we have a lot of different countries in Africa that are opening up, right? You've got Ghana, you've got Kenya now looking at it, you even have markets like Morocco.
With Nigeria ranking among the top crypto adopting nations globally, today's discussions mark a crucial step towards institutional readiness.
And now to communication. The Nigerian Communications Commission, the NCC, has approved a 3-year national roaming agreement between MTN Nigeria Communications PLC and Emerging Markets Telecommunications Services Limited, enabling now mobile subscribers to access MTN's network infrastructure across the country. In a statement released to the Nigerian Exchange and Investing Public, MTN Nigeria confirmed that the agreement would span 3 years, allowing 9 mobile subscribers to access and roam on MTN Nigeria's expansive network infrastructure across the country. Under this arrangement, 9 mobile users can now seamlessly access MTN's network coverage in locations where 9 mobile lacks adequate infrastructure. And we're staying there. Top internet service providers, the ISPs in Nigeria, have recorded a significant drop in their customer numbers as Nigerians cut spending on internet services. According to the latest ISP data released by the Nigerian Communications Commission, total active customers across the 127 ISPs whose data were made available dropped to 289,369 as of the first quarter of 2025. And that's coming down from 307,946. That was the number for the third quarter of 2024. The NCC's data shows that active customers with Spectranet, which is one of the oldest ISPs in Nigeria and the largest in terms of customer numbers, declined by over 2,000 from 105,441 in the third quarter of 2025 to 103,252 in the first quarter of 2025. The third largest ISP by customer number, Fiber One, saw the largest decline in active customers as the database plunged from 33,000 in third quarter to 19,000 in the first quarter of 2025, losing over 14,000 customers. Specifically, Starlink, which jumped to become the second largest ISP in the country last year, recorded its first loss as its customer base plunged from 65,564 in the third quarter of 2024 to 59,509 in the first quarter of 2025. And now let's look at our currency, the Naira, the performance in the first half of the year, or in the last month, June, that's just concluded. And so we saw that we started this year with the Naira trading at 1,475 Naira for a dollar. That's on the NAFEM, officially exchanged for 1,473 to a dollar. And then by July, yesterday it's closed at 1,529 Naira for a dollar. So we've seen a level of stability, and a lot of people have said this is a new normal, looking at the Naira at under 1,600. I wonder if that is comfortable with you. But let's speak to the Chief Executive Officer of Finance with Mukhtar, Mr. Mukhtar Mohammed. Let's get his views on this. Mr. Mohammed, good morning and welcome to the program.
Thank you for having me.
So it looks like the Naira has found its level because we've seen it just hover under 1,006 since the beginning of the year. Can we just accept it? This is it. Are we comfortable with this? What are the implications?
Again, I always say that the naira has found its level in what for me corridor of stability. Not really that the naira has found its really level. Like you rightly pointed out in your report, the beginning of the year we saw the naira 1,475, and we've seen it closed yesterday at 1,529 official. That's the official rate. Well, you say that the naira has found a corridor of stability for the past 3 months because we've seen it gone to 1,600 and now we are seeing it at 1,525. It seems to be that we just maintain that corridor. Like that's why I say it's a corridor of stability. So I don't think the naira really found its place yet. For me, I think the naira still has a long journey to go. When you look at economic variable, you look at international politics or international trade, how it will affect the naira going forward, especially when you look at the crisis that we have in the Middle East and also the issues that have to do with trade. In America, the American government with other world economics, all those will turn back to have an effect on the naira. But again, if you are looking from where we are coming from, then you could say that the naira has done pretty fair in the half year if we look at where we are coming from. But again, like I said, the naira has not even been able to hit the budget benchmark of 1,500. So we need to be carefully optimistic, because any external shock would definitely see the naira going down against the dollar, and we are not so sure that we have any coping mechanism to guide against that as it stands for now.
Mukta, when you say that the naira still has, a long way to go, what direction? The positive, the negative? Which way do you see it going?
It depends on macroeconomic policies, and also it depends on world events, because again, now our major earnings is crude oil. And if you look at our budget benchmark of $75 per barrel, and they are looking at what you said at the close, when you are analyzing the oil market, it's about $65. So we're already $10 short of our oil benchmark. And that will have huge effect on our currency in terms of meeting FX, our reserve. And you've seen that what you've seen thus far, when you see the naira, you've seen that a lot of intervention from the CBN and also foreign direct investors or foreign portfolio investors mostly have been what have created those stability. So once there's any shock, definitely that will affect the naira. So that's why I say the naira still have a long way to go. Before we probably say the naira had found its level, I think it's when you see the naira stay at a certain point for about 6, 7, or 1 year, or 2 years, or 3 years, like what we normally obtain before now. And also you also shouldn't forget that the CBN said they want to make the naira more competitive. That was a new language that we saw. And so they are not looking at stability of the naira, they are looking at competitiveness of the naira to attract foreign portfolio investors or foreign direct investors. It's only after that has been achieved that they will begin to think about stability of the naira. So for now, I think they are more interested in competitive nature of the naira. So that's why I said the naira still have a long way to go. When you say something is competitive, that means you definitely have the ups and the downs of those currency before you finally maintain stability.
Bringing in that word competitive also, it does paint a picture, because we saw the Chinese yuan being devalued, to attract more export. We now see the dollar, the US dollar, also losing its value. We haven't been told if it's deliberate or if it's just the factors playing it down. But we know that once a currency is devalued, then exports becomes cheaper and they're supposed to increase. So in Nigeria's case now, what are we exporting really? Is this, do we need to toe this path of China and the US, or what are the other options for us?
You can't tell the part of the US and China, because again, 90% of what they produce, they consume. And also they are able to produce what they consume. Rather, here we are seeing about 60 to 70% what we consume, we do not produce, we bring it, and sometimes to put it into finished product, we have to import machineries in that will make it into finished product. So we don't have that capability to deliberately devalue our currency. We can't, because again, if we do that, that will also make Nigeria a dumping ground, especially for African product. So definitely we can't go that route as it stands now. What we need to do, I think that's why the CBN is saying, want to make the Naira competitive to attract more investors, especially foreign investors, whether foreign portfolio or foreign direct investors. I think that's what they are definitely looking at now. And if you look at in terms of the non-oil sector, you realize that in terms of percentage, the non-oil sector has been performing very well in terms of addition to percentage to the GDP. But when it comes to value, in terms of exchange value, in terms of monetary value, you see that the crude oil is still the major source of that monetary value. So we have to do a lot, and in that thing we are going to be looking at the other aspect of the non-oil sector, which we've not been able to really take advantage of. And the main reason why we can't do that is lack of infrastructure. So we definitely want to work on our infrastructure so that it will make most of our non-oil good more competitive, because cost of production definitely makes it more expensive in the market. So definitely, I think what we need to do is to improve on that. But majorly, I think what the CBN is looking at is to see how they can attract more investors into the Nigerian market. That's why they are saying that they want the Naira to be competitive.
So I guess we can connect this to the reforms, the ongoing reforms. And at the just concluded Afrexim Bank meetings, some representatives of the United States said Nigeria is on the right path with the reforms, but there's still more to be done. So Nigerians should buckle up for more hard times. So how much more reform do you think the country needs for us to be able to see the gains in the macro, which the numbers show, move to the micro? Or is it just the issue of leakages? Because that has also been brought in as a factor that's deterring that transition from macro to micro.
And you hit the nail there, leakage. I think that's one that when you look at leakages in Nigeria, you look at cost of governance. Cost of governance is still very, very high. And so that's one way of leakages that we are saying. We've not been able to balance our economy to look at, to begin to play the pace whereby we look at the area for PPP, public-private partnership. So our scarce resources are still being used for infrastructural development. I think that those are part of what we need to do. Those are part of that what will block leakages. Because sometimes when you look at these leakages that come from, they come through these political appointees in terms of the allowances, and also leakages that come as a result of projects, which sometimes the figures are inflated. So those are part of the leakages that we need to really deal with. Now, when you talked about the hard times, you see, this current administrative policy, economic policy of the current administration, tend to come from the up to the down. So it's not yet touching the down, because again, a lot of people that benefit from this administration policies are the ups, those ups up there. You really see the rich, because again, they are able to take advantage in terms of investment, in terms of, because investment relatively become very cheap when you look at the exchange rate by the Naira. So those are the ones that are taking advantage and seems to be making a lot of headway. And that also is not good for the economy. But when you look at the bottom, the real Nigerians that are feeling the bunch, most of what they are supposed to enjoy, let's give you an example, in the removal of subsidy. We are seeing that price have oscillated. We've seen at that removal, it was about 1,100 in Lagos. We have seen it come as low as 825 Naira. But the transportation costs in terms of movement of goods and services have also not come down. So that has not helped those people in the downtrodden. So, and again, their means of earning have not really improved. You just talked about the report that was brought in by Stanbic IBTC. When you look at those businesses, when you look at those businesses that are definitely, now you realize that it's the SMEs, it's the smaller business, which are the larger employer of labor, and they are those that employ this down the bottom half of Nigerians that are so prepared for active. I think for now, what it means is that this policy is not yet trickling down to the masses. So it's still there. So that's why they're saying Nigerians should prepare for more hard times. And especially when the exchange rate is still a major challenge, because we still have to come down to that place aspect, because that also determines the cost of goods and services in Nigeria.
So could you help us paint a picture of how these leakages and high cost of governance is denying Nigerians of the benefits of the reforms? You know, if you could give an example, how it is stopping that benefit from flowing.
You know, we don't have those figures. They don't give us those figures. But all you need to look at the cabinets, and again, you need to look at how many people travel with Mr. President, and you need to look at our government entourage. You see the numbers of cars that goes with them when they travel. So definitely that will give you an idea of what we talk about leakages, especially in the area of political appointees. You don't even need to go far again. When you look at the budget, the budget, the two budgets that are running, realize that most of this budget as recurrent expenditure is not suffering anything. It's capital expenditure that tend to create job for more the lower end of Nigerians that are really suffering. Their cash are not being released because government is saying there's also no funds for that. Then when you talk about other leakages, now you look at a project, sometimes you look at some of these projects that are being implemented with government for scarce resources. I'll give you an example. If you are doing a Hugos project like the Calabar Coastal Road, I expect that those roads should be driven largely by PPP, public-private partnership. We have not seen that, and we've seen the president had commissioned, I think, 39 kilometers of that route, and it seems that work is still in that route. So those are major leakages. We've put in so much money in there, but again, you don't even have the resources to complete it. And even with what you have completed, you are not earning anything from it yet. So I think, for me, those are some of the major leakages. And you also look at insecurity also. It's pouring a lot of leakages in Nigeria because, again, you have to deal with the bandits. You have to improve. I mean, you have to improve security, and improving security comes a lot of costs. And sometimes some of these costs are also inflated. So those are part of the leakages that we are suffering. Because when I talk about that, I don't know if you followed the news yesterday. You look at Rivers State and where the budget that was submitted by the administrator of Rivers State, and the House was questioning the budget that, how can you say you want to provide speedboats, about 30 billion for speedboats alone? Those are type of the leakages that there seems not to be a synergy to know that some certain aspect of project have to be federal government project, not state government. Those are part of the leakages that we have seen, and those are what are affecting our economy at the moment.
Yeah, unfortunately. So I know that, the Rivers budget is also another conversation. But let me read something. Mr. Mukhtar, currency in circulation, we see climbed to 5.015 trillion naira in May, marking a modest increase from about 5 trillion in April. And this is according to the central bank. The 0.24% uptick points to continued liquidity buildup in the system, despite the apex bank's tightening stance. So sometimes it's confusing. Yesterday, we also saw the news that deposits from banks to the central bank has increased. Now we're seeing that currency circulation is still ticking up. So where is it? I mean, the central bank is very tough on its stance to mop up. The manufacturers are feeling the pain, but we still see currency in circulation. Where is it coming from?
There are always three players in the market. We mustn't forget. We have investors, we have traders, and we have speculators. They are part of the market. So sometimes when I hear the CBN say we are going to go after currency speculators, and I say they are part of the market. Globally, they are part of the market. The only way you deal with them is for them to get their fingers burned. So they definitely see opportunities especially when they look at what is happening in the oil market. Despite the price that we saw some weeks ago, we're not able to take advantage of it because, again, our production is still very low due to oil theft. These are signal to them sometimes to currency speculators that the Naira has not found its level because we don't have the resources to definitely intervene when we have to intervene. So when people are not doing the right thing and thinking, the only way you can deal with currency speculators is to take them up, arrest them, it will remember the time the NM was going after currency speculators, and through the EFCC they were going after currency speculators, but at the end of the day, it didn't achieve anything there.
Network glitch there with
to
Mr.
the market.
Mukhtar.
So what I would keep to they are a global part of the market. So they will definitely continue to be part of the global market continuously.
So, Mr. Mukhtar, how do you think?
Yes.
What are some of the first steps you think? Because I mean, the CBN for the fiscal policy, they've received a lot of applause even before now. What else should they do or can they do, to not to tighten more, but to close those gaps that you've noticed?
There's nothing more you can do in an economic like this that is driven by FX volatility than to improve liquidity. We've said it over and over, and I will say it over and over again. The challenge with the market has absolutely nothing to do so much with what is happening. We have a lot to do with liquidity. You talked about the manufacturer. If the manufacturers are able to assess FX as when due, definitely they won't have a challenge. They will definitely, that mean you've been able to address that area of liquidity. Liquidity remains the challenge, and this challenge is there, and we are not seeing it coming down anytime soon. When you look at the means whereby we earn revenue, as I've said it over and over, through crude oil sales, we are not even meeting our OPEC quota. You looked at one of the world's largest single trade refinery, Dangote, importing crude oil even enough to be able to meet their own production level. So we are not meeting it. Internally, we are not meeting it. Externally, we are not meeting it. So that's a challenge. You look at remittance with the current tightening of immigration globally. Remittance also are having their own challenges. So we are not getting inflow like we used to have. Foreign direct investors are not yet coming because before they will come to your market, there must be stability in the exchange rate. The foreign portfolio investors are coming, but if you look at the data from the Nigerian Stock Exchange that was released, you realize that the number that comes in sometimes, the numbers that go out are higher than the numbers that comes in. So there's still a lot to do, and what we need to do is to improve liquidity. Is either the CBN come up with policies or with products that will attract more investors, especially in Nigeria and the diaspora. That would be the game changer. We have done Eurobond, we have done a lot of Eurobond, but we are not seeing those effects. We have done borrowing through forward sales of crude oil. We have not been able to stabilize the exchange because Nigerians, especially the manufacturing sector, still depend more on FX to be able to meet demand. So we need to improve liquidity in that sector.
Mr. Mukhtar, isn't it possible to need less of FX? Maybe manufacturers will look inwards more and use domestic raw materials. Wouldn't that reduce the demand for FX and then kind of find a balance for the currency?
I said something. I said, yes, we could do that. But what about the machinery to make it into a finished product? Do you have the steel industry to be able to fabricate such machineries? And how long does it take to get such machineries? You look at the larger manufacturing sector, they have been able to build independence plan. Most of if not for that, cost of some of these goods would have gone higher than where it is. But you can imagine if a place like Lafarge is paying for power from a power holding company, you could imagine what the cost of production will be. So definitely in doing that, it could be, it's not a short-term measures. It has to be a long-term strategy. Because again, you need to develop your steel sector if you want to look inwardly, to be able to have fabricate machines that will be able to make these products into finished products. So it's not a day job. So it's not something that you can achieve within 2 to 3 months because our steel, despite having the largest depot in terms of steel, we've not been able to take advantage of that sector.
Doctor, thank you so much for helping us to understand the different perspective and different possibilities and prospects around the Naira. Chief Executive Officer of Finance with Mukhtar, Mr. Mukhtar Mohammed.
Thank you for having me.
All right, let's take a break. When we come back, Afrexim Bank is still in the news. So what prospect now? You'll find out after the break. Please stay with us. Welcome back. Still watching Business Morning right here on Channels Television. Now, the African Export-Import Bank, Afrexim Bank, has completed the upsizing of its reserve-based lending facility to Oil Limited to $375 million. In a statement shared by the bank, it explained that Oando's pay down of the original $525 million facility secured in 2019 to $100 million in 2024 created the headroom for refinancing. RBL facilities allow upstream oil and gas companies to borrow against their proven reserves. Loan amounts are based on the value of future production and revenue with periodic reassessments. The bank says that the upsizing will support O&O's plan to achieve daily production of 100,000 barrels of oil and 1.5 billion cubic feet of gas by 2029. The executive vice president, Global Trade Bank of Afrexim Bank, describes the transaction as key to advancing local content in Africa's oil and gas sector. It says Afrexim Bank has been a long-time financial partner to O&O and continues to support its growth initiatives. And they're also pleased to have Mercuria, one of the world's largest independent energy and commodities groups, bring global expertise and financial strength to the deal. And talking of Afrexim Bank, I had to sit down with the director of compliance with the bank. So in the midst of all of these deals, compliance and regulation following the set down rules is very important. That's the conversation I had with the director of compliance at Afrexim Bank.
I like to describe compliance as the door that you open to benefit from secure banking. Compliance is the way of ensuring that the activity of the bank, like the verb says, complies with what is required by the local authority or the other countries where you want to do business. You cannot come do what you want. You need to come and set your business in a certain framework. And that framework is what the compliance team is ensuring that it is respected. So when you come to Nigeria, you do banking, you have to ensure that whatever you do complies with what CBN says. That's its compliance. When you want to promote your business, you want to do trade, have a FX transaction, it has to comply with what the regulators said. So teams like us are here to ensure that the bank does good business, but in line with the framework designed by the regulator. That's compliance. So you don't derail, you follow the road which have been designed by the regulator so that you do not breach, because you know that when you breach, you are jeopardizing the business, you are jeopardizing your license as the bank, and you are jeopardizing your brand. So one needs to ensure that the activity of the bank, be it very dynamic, has to align with what the framework, the regulatory framework is.
Since we're talking about decades of resilience, could you take us through some of the changes that have been recorded over the decades when it comes to compliance?
We notice one thing, and which is common with our continent, is that everybody wants to have better life for population. And that is impacting the regulation, okay? You frame the regulation to avoid that the country being leveraged to do money laundering. You frame the regulation to avoid that terrorism grows. You frame a regulation to ensure that you do better trade with your counterparts, be it local or from other countries. Every country has a regulation on those domains. And year by year, we are improving them because we learn from experience. Oh, this happened. The regulation did not take into consideration. And you see CBN, another central bank, coming with new regulation on digital currency. This means that we are scaling up and adapting the country to what is happening in the world. So those new regulations are a new framework that entities like Afreximbank has to always be conscious of and comply with, and ensure that when we are coming in a territory, we are coming conscious of ABC law requirement that we have to embed in our product, in our process, so that when we come to Nigeria, nobody complains. When we go to Rwanda, nobody complains. When we go to Southern Sudan or Zimbabwe, nobody complains, because up front, the compliance team has said to the business, take care of ABCD. That ABCD requirement is embedded in the product, so that we do it differently from a country to another, because you may come in a country and say you cannot put more than $100,000 million in this. And you go to another country, they set another limit. So that diversity in the regulatory environment is something which is quite exciting, I think, and making us very adaptive to the environment. And that's the beauty of Afreximbank. We adapt to environment. We are a counter-cyclical bank, but every time we do an initiative, we are conscious of what the environment is, what the regulation is, and we adapt to it.
And now we have a lot of talks on artificial intelligence, digital transformation, and I'm sure that's also affecting rules, policies, guidelines, and compliance.
Indeed, that's a new world, and that's why we are bringing the conversation on the table. We are organizing the Afreximbank Compliance Forum in November 12th to 14th in Kigali, in partnership with the Central Bank of Rwanda and the Rwanda Bankers Association, to discuss AI, particularly, to discuss AI, how AI can be leveraged by compliance to better support trade, to better secure trade. And that topic will be discussed, then I said, in Kigali, where we will be inviting central bank, trade specialists, compliance specialists, but also AI specialists to come to see, discuss that you just cannot take technology and just bring it in your environment. You need to adapt it. You need to tropicalize it. That's my favorite expression. Because when they were designing it somewhere in one country, they took the local requirement. So when you are exporting it, so maybe there are some codes that you have to change to adapt it to what Nigeria is expecting, what Rwanda is expecting, or what Senegal is expecting. So, but AI is adaptable enough to be leveraged from, with one objective: better trade, better compliance, better trade.
So it does seem like one threat coming up recently is the trade-based money laundering. I wonder if Afreximbank has taken this into consideration in compliance and policies as you deal with partner countries. Policies are you putting in place to at least watch out for things like this?
We at Afreximbank, we have invested several millions of dollars to protect ourselves against trade-based money laundering, TBML. That's the issue of money laundering related to trade. And the way we tackle it is through, obviously, having the right tools to monitor our trade, our flows, okay? And to ensure that that issue of TBML related to trade is understood, is monitored, and we are able to stop a transaction because we know that this is the issue. And that's something that all regulators across the world are conscious of, and solution in terms of specific regulations, specific policies, specific systems are put in place to manage TBML. So it's a day-to-day business to us, and we know how to manage it, and we are adapting also to the issues, because you know, money launderers, they are quite quick on changing their techniques. So we are also adapting ourselves to that, to just ensure that our platform is not leveraged to to do money laundering related to trade, TBML.
So while you take care of Afrexim Bank, I'm curious, what about the countries you deal with? Can you make them adapt? Can you make them also be more conscious of dealing with risks, with all this money laundering and other forms of threats?
It's not my responsibility to design the regulation of a country, but it's my responsibility to ensure that the bank which Afrexim Bank is working with, is financing, has a platform of compliance which is strong between us and them, because when a dollar comes from a country and pass through our platform, that money is given outside to one of our correspondent banks. And we need to show that the value chain has been properly handled and is free of TBML issue, is free of terrorist financing issue, and that's my responsibility. And that's why we work closely with the financial institution in the country where we are. It's a collaboration to ensure that we are promoting compliance, we are promoting good systems, we are implementing those systems so that we have a better understanding of the customer base, we have a better understanding of the business, and we are sure that when we support them, it's a clean business. It's not a business where you have hidden initiatives which are leading to the problem we have discussed in just now. So we cannot design as Afrexim Bank the regulation of a country, but we can support financial institutions in countries to improve their financial controls, their compliance framework. And we discuss, we ensure that they comply with their own regulations, okay? Because we have a good understanding of what the country requires, and we always ensure that the banks we work with also complies with that before we work together.
And now that it seems like Nigeria is on its way out of the grey list, what difference does it make for Nigeria in its dealings with Afrexim Bank?
Oh, it's more attractiveness for investment. It's ability to get in, how can I say, loans from partners. So as soon as you are out of it, the country is seen being more attractive and less prone to issues related to money laundering, corruption, etc. So that's why all our countries are today fighting to be out of the grey list and seen as a partner which is viable and credible enough to do business with. So that's why it is important to put the right structure, the right policies, the right framework to be out of the grey list.
Yeah, so whether it's intra-African trade or extra-African trade, the right structure, the right policies and reforms are needed on the continent. And I mean, that's the summary of the message from that conversation by the Director of Compliance at Afrexim Bank, Mr. Idrissa Diop. Now let's head to the global space with Ladi Williams and find out what else President Trump has done.
Oh, yes. Yeah, we'll get to President Trump, but definitely he's done a lot, at this point.
As usual.
The spat between he and Elon Musk. They used to be buddies before, but things have changed, Right now there's talk about deporting Elon Musk, and I'm like, wow. How do you deport a billionaire? At this point, that's going to have an impact. All right, let's get a check on what's playing out with in other economies. Now, we see Deutsche Bank. They've downgraded Swedbank from buy to hold, while also reducing its 12-month price targets from about 271 krona to 260 krona. That's Swedish currency there. According to a note led by analysts there, the downgrade reflects a narrowing valuation gap between Swedbank and its domestic peers, which has diminished the stock's relative appeal, particularly given its current trading multiple of approximately 9.4x price to earnings. Additionally, Deutsche Bank highlights ongoing uncertainty surrounding a potential settlement with U.S. authorities related to Swedbank's past operations in the Baltics. The absence of new developments on this matter constrains any near-term upside for the share price. Overall, the downgrade underscores a shift in sentiment, diminishing valuation advantages, looming legal questions, and pressure on net interest income, driven by anticipated central bank rate cuts, has lessened the rationale for maintaining an overweight position in the stock. And we see Kathy Wood there, American investor and founder, chief executive officer, and chief investment officer at ARK Invest. She's making some moves in the market at this point. The Kathy Wood's ARK managed ETFs executed a series of strategic portfolio adjustments, reinforcing their conviction in key innovation-driven industries like while trimming exposure in others. ARK purchased a total of 56,000 shares of Tesla Inc., valued at approximately $17.9 million, split between two flagship funds, that's RK, 43,000, and ARKW, about 13,242 shares. This transaction continues a recent trend of increasing Tesla holdings across ARK suite, underlining CEO Kathy Wood's ongoing confidence in Tesla's long-term growth trajectory. In its biotechnology-focused fund, that's ARKG, ARK acquired 949,000 shares of Atai Life Sciences NV at a total cost of roughly $2.08 million. This addition aligns with ARK's broader strategy to support groundbreaking companies in mental health and neuroscience. The fund also added 153,000 shares of Compass Pathways, investing approximately $430,000. Amazon founder and executive chairman Jeff Bezos, he sold approximately 3.3 million shares of Amazon.com Inc. That's late last week, generating proceeds of nearly $737 million. According to a Securities and Exchange Commission filing that was submitted yesterday, the sale, executed under a pre-established 10b5 1 trading plan adopted in March, brings the total authorized dispositions to 25 million shares. The filing further indicates that Bezos now holds approximately 905 million shares of Amazon. This marks the first major sale of his stake in 2025. Over the past year, he has offloaded roughly $5 billion worth of shares as Amazon stock reached record highs. However, Amazon shares have traded flat so far this year amid concerns over trade tensions and tariffs. Then on to President Trump now. U.S. President Donald Trump announced that Israel has agreed to the terms necessary to finalize a 60-day ceasefire with Hamas in Gaza. Speaking on Truth Social, Trump said his administration held a long and productive meeting with Israeli officials and confirmed that Israel has agreed to the necessary conditions to finalize the 60-day ceasefire. He added that Qatar and Egypt, who have worked very hard to help bring peace, will present the final proposal to Hamas. Trump urged the Palestinian group to accept the agreement, warning it will not get better, it will only get worse. The announcement comes amid growing concern over whether Hamas will embrace the deal. So far, neither Hamas nor Israel have publicly responded to the proposal. Hamas has reportedly cited the need for guarantees that Israel won't resume hostilities post-ceasefire. Also, President Donald Trump stated on the Air Force One that he will not extend the July 9th deadline for nations to negotiate trade agreements with the United States. He emphasized that any country failing to reach a deal by then will face new tariffs. Trump expressed skepticism about concluding a deal with Japan, noting its refusal to open markets to U.S. rice while exporting numerous vehicles to the U.S. He says, we've dealt with Japan. I'm not sure we're going to make a deal. I doubt it. He said, adding that Japan is very tough. To counter non-compliance, Trump announced the administration is prepared to impose tariffs of 30% to 35% or whatever the number is that we determine on Japanese imports, a rate considerably higher than the 24% pause since April 2nd. Then we see TikTok and its parent company, ByteDance, preparing for further layoffs, according to Business Insider reports there. Internal memos shared with employees indicates upcoming organizational and personnel changes targeting TikTok Shop, the company's global e-commerce division. The restructuring follows a comprehensive review aimed at establishing more efficient long-term operating models. TikTok Shop has already undergone several rounds of job cuts earlier this year. TikTok's U.S. e-commerce team, which missed multiple 2024 performance goals, has been under mounting pressure. Performance setbacks intensified in 2025 after President Donald Trump's tariffs hiked on Chinese goods caused a sharp decline in U.S. Order volumes, particularly among the overseas sellers. All right, to the auto industry now. We see Volvo, they reported a 12% decline in global June sales with 62,858 units delivered, down from 71,514 a year earlier, marking the fourth consecutive month of declining volumes. Volvo is steering towards operational efficiency and resilience. It's adapting its production footprint to offset tariffs and stabilize EV supply, such as increasing manufacturing capacity in South Carolina and Belgium. However, continued global trade uncertainties and subdued EV demand, that's posing some risk there to recovery for Volvo. So there you have it. That's mostly what's playing out. We're still watching out what could play out again. This week we're seeing the first half of the second half of 2025 is moving along, but we're seeing the same issues from the first half. Yeah. That's still with us at this time.
I think we will get a big one, maybe by the 8th or by the 9th.
Yes.
When
the deadline.
Yeah, when the deadline
Another
comes.
D-Day.
Yeah, but Ladi, I have to confess to you.
Right.
After the Cathy Wood story and the Bezos, I didn't hear anything you said again.
Right.
Because I think you should be calling me Cathy Woods from now.
Right.
Yeah.
You want to be the Cathy Woods of Nigeria.
Yeah.
At this point, because she's always making big moves.
You know what I'm saying?
Yeah.
And that's a strong move.
Yeah. Once she moves, the
market moves with her.
Reacts. Who's the Cathy Wood of Nigeria? Ini.
All right, ladies, thank you. And just before we go, we'll tell you how the market closed yesterday. Profit taking continued, and the market went down from 119 to 117,000 level. We're still not scared. It's normal for investors to take profit. I'm sure if you invested and you saw some profits, you would want to take it. That's the essence of investing. And then the market cap is still around 75 trillion, 75.8 trillion is what it closed at yesterday. Activity mostly good. Top gainers, RT Briscoe, Honeywell Flour, and top losers, UPL Score. Enolix seems to be making some moves, but yesterday I believe it was one of the Dangotes that really drew the market. A huge attention on profit taking on that actually brought that market down. But I mean, you still have some stocks still soaring, Honeywell Flour and all of that. So it's still a positive market, and it's not just in Nigeria. Anita told us yesterday how the Kenya stock market is also glowing at this time. So it's a good one. Mr. Mukhtar did warn about, when you have a lot of foreign investors, they can get up and leave at any time. We hope that will not be a case. So domestic investors is it. But that's it on the program. Thank you so much for being a part of Business Morning. Laddie Williams with Anita Edet will be back at 1 p.m. for Business Incorporated. It will be 55 minutes also. They'll give you... I'm Amy John Mekwa. Enjoy the rest of your day.